QBO Gym, and this is where we have numerous hands-on exercises that simulate real-life scenarios that you may encounter as a bookkeeper. Each month covers a variety of new topics and scenarios, and to make it a little bit easier for you, we break it down into 4 different sections. So if you are looking to work on your bookkeeping skills, this is the place for you. And if you want to do an entire month's worth of these all on your own, be sure to join our free 5-day bookkeeping challenge. All you need to do is click on the link in the description. But let's go ahead and get into today's exercise, which is being pulled from our October Year 1 cool down section. At the top here is an animated video to give you an understanding of what you, the bookkeeper, will be doing for your client Craig this month. Below that is an interactive pre-assessment quiz that relates to that video up above. Below that are the exercises in this section. And at the bottom here is an optional area where after you have gone through all of the exercises and completed them in this section, you will unlock some sample marketing posts that you can use on your LinkedIn to share with everyone what you have learned so far. So let's dive into today's exercise where we're going to practice running Craig's reports. Go ahead and click on that link to have the exercise come up for you. I have it here on the right side of my screen, so let's read through the scenario. After you have reconciled Craig's bank statements, it's time to run reports. You'll create a profit and loss, or P&L, and balance sheet for Craig. Now that business is picking up, Craig has started to work on some longer-term business goals, but he feels like there should be more money in the bank than there is. Before you can take a deep dive into Craig's cash flow, you'll need to talk to him about the balance sheet. Prepare for your meeting with Craig. You will need to be in the sample company to do this exercise. If you are not sure how to get into the sample company or get your own free QBOA account, be sure to click on the link in the description. I have the sample company here on the left side of my screen. Once you sign in, this is what it will look like. So let's go ahead and get started with this exercise. To get to the report center, we need to, on the left navigation bar, click on reports. So the left navigation bar is this black bar here. Reports is halfway down. Go ahead and click on that. And then we want to run the balance sheet. So go ahead and click on balance sheet. That is both in the favorites section as well as in business overview. So go ahead and click on it. And you will see that it has already been run for you. Now, the balance sheet lists the total in each account as of the date of the report. In the header of the report builder, however, QBO shows a report period up here. This can be confusing because a balance sheet always represents one day, as in the last day of the period. So why does it show a range? The beginning date is the date of the first transaction shown when looking at the details of each account. So you're going to review the following steps to see how this works. So let's change that report period to this month. So go ahead and click into that down arrow and then go ahead and select this month. And then we want to click on Run Report once again. Now, as soon as we do that, you'll notice that the totals on the balance sheet did not change. They still show today's values. Let's go ahead and click on the checking account total. So that is this right here. Here is checking. So go ahead and click on that total. And once you do, you will see this transaction report. Now, this shows all of the transactions that make up that balance. The beginning balance, this one right here, is the balance from the first day of the period that we can see right here. So let's go ahead and go back to the balance sheet by clicking on Back to Summary Report. So go ahead and click on that. And now let's take a deeper dive in the balance sheet itself. So now that you understand what you're looking at, let's do that. So let's go ahead and start with the assets, which is on the top here. So the balance sheet is broken out with assets at the top and then liabilities and equity at the bottom. So we're going to focus on this section first. The first thing to notice are the bank accounts. This shows the total amount of cash in the checking and savings accounts. As you can see, I'm broken up here. Since you just reconciled these accounts, they should be fairly accurate. However, money changes hands all the time, so it might not be the same as what you see if you opened up your bank mobile app and looked at the balance. Accounts receivable, which is right under that, this shows the total amount of money that Craig's customers currently owe him, as in invoices that have been sent but not yet paid. This would be a good topic for discussion with Craig. You could run an accounts receivable aging summary and discuss how long it's taking people to pay their invoices. Perhaps he could devise a strategy to encouraging payment at the time of service, or he could institute deposits or late fees. So that is this line right here, which is a pretty significant amount for a small business. So that would be a really good topic to talk with Craig on. The next thing is this inventory asset, which is showing right here. This is the total cost of the current inventory items in stock. Note that it's not the resale value. That is, it's not how much Craig could sell them for, but rather how much he paid for them. Then we have undeposited funds right under here. This is where checks and cash are quote unquote held until they are deposited into the bank. So they are in this holding account until they physically make their way into the bank. It's a good idea to encourage Craig to deposit his payments right away so he doesn't run the risk of losing them or being unable to cash them. And finally, here we have the truck, which is down here. This shows the current book value of the truck. As Craig uses his truck, the value should depreciate or decrease. In accounting terms, depreciation does not affect the resale value of the truck. In other words, it does not mean that the truck is worth less. It just simply reduces the value of the truck on the books to reflect the use and wear and tear of the truck over time. That wear and tear is recorded as a journal entry and becomes an expense to the business that is reflected on the profit and loss. A good bookkeeper will stay on top of this and ask for a depreciation schedule from Craig's accountant. Ideally, this is reflected monthly. All right, so now that we have looked at the assets, let's go ahead and take a look at the liabilities section down here. So the first thing is this accounts payable right here. This is the total of all the bills Craig has yet to pay. Staying on top of bills and making sure Craig does not become delinquent is an important part of the cash flow discussion. Late payments could incur fees and affect Craig's credit rating. Then we have the MasterCard here under credit cards. Craig seems to have a fairly low credit card bill. This would be another thing to keep an eye on. Then under other current liabilities, we have both the Arizona Department of Revenue payable and the Board of Equalization payable. These are both monies that are due to sales tax agencies, as you learned in the strength training section. Then we have down here below that is a loan payable. Again, this is under other current liabilities. But what exactly did Craig take a loan out for? When does he have to pay it back? Where did the money go? Since it is listed as a current liability, it should be paid back within a year. Does Craig have a plan for this? This is an important discussion to have. And then finally, here we have notes payable. This is under long-term liabilities. So the difference between current and long-term is that current, you usually would pay it within a year. Anything more than that would be a long-term liability. So it seems that Craig has borrowed $25,000 from someone, but where did this money go? If he took out a loan for the business, the money should have been deposited somewhere. If it is a line of credit, it is not considered a liability until it is used. So you will need to address this with Craig as well. Now, the biggest red flag is the opening balance equity, or OBE for short, account, which is showing right here. This is the equity section. And here we have that opening balance equity, and it's showing as negative $9,337.50. Now, this reflects the amount of money / asset value. My screen just went. Where did it go? Here it is. It reflects the amount of money asset value that the business started with. In an ideal situation, this should be zero, as all money that came in came from somewhere, whether that's from the owner's personal contribution, an investor, or a loan of some kind. If that is what happened, then that's how it should be categorized, not as opening balance equity. Really, OBE should only have a balance if the prior starting from zero records are in another system. And when they started QBO, they didn't take the time to bring that over. This would make sense if the business had been in business a really long time or it had a huge volume of transactions. OBE should never be a negative number like this because that would indicate that the business started at less than zero. Even if you took out a loan, which feels like starting with less than zero, the cash received from that loan should be reflected somewhere and balance things out. So you will need to spend some time cleaning this up, spend some time cleaning up how some of these items were recorded, but that's for another day. So that is a deep dive into all of what all of these things are on the balance sheet. Remember, assets, and then you have liabilities and equity down here. And assets should always equal the combination of these liabilities and equity. So we're not going to do anything more with the balance sheet. Instead, we're going to go ahead and run the P&L so that you can get that off to Craig too. So go ahead and click on Back to Report List. And this time we are going to run the profit and loss, which is here under favorites. And it is again also here under business overview. So either one of them is fine. Go ahead and click on it and it will be run automatically for you. And we're not going to do anything more with this. We're not changing the report period. We're just going to leave it as is. So if you were going to send this off to Craig, you would have a few choices. You could send it off by email, you could print it off, or you can export it to an Excel or PDF. You get to choose how you want to send it to Craig. And if you are meeting with him to go over the details of the balance sheet, you may just want to print it out and then take it with you. But that's it. That's how you would run reports. Now, if you like this exercise and you'd like to do more like it, be sure to join our free 5-day bookkeeping challenge. All you need to do is click on the link in the description. We have finished the October issue of the QBO Gym. Congratulations, you did a great job. Keep on practicing and be on the lookout for our November issue. And I will see you